All right, so today is Monday, the 28th of April 2025. I mean, the month is just about to come to an end. Just in a matter of like 2 days, the month of April will be over and we enter into the month of May. Good morning, Madam Monaji. So let's look at what we have, what the market has in stock for us for this week. Today, Monday 28th, as in we look at the fundamentals first, then we check the technicals. Today, Monday 28th, there's going to be federal election in Canada. That's Monday, April 28th, federal election. During election period, you need to be very careful because the currency is very, very likely to be impacted. I remember last year when the United States had its own election, the dollar was really, really impacted across board. So I want us to be very, very cautious with anything card, especially today, because election is a fundamental event and it will have great impact upon the currency and the economy of the country. So, and it's an all-day event. Election runs all day. So you can see there Monday, April 28th, all-day card federal election. Let's trade the card today with a lot of caution. Because of time, I'll just focus on the key events for the week. We really don't have much tomorrow, Tuesday. The only high impact event tomorrow is the JOLT job opening from the United States. And that will come up by 3 p.m. It may impact upon the market, being that it has to do with job opening, more like vacancy, as we call it here. So that will really have some impact upon the market. But the next major event, which is expected to be volatile, will be on Wednesday, and that is from Australia, 2:30 a.m. on Wednesday. Like I always say, you can either stay awake till that time to trade it, or you wake up early, whichever one works for you. But there'll be CPI from Australia by 2:30 a.m. on Wednesday. And the three events will run simultaneously. We have the CPI quarterly, we have the CPI yearly, and we have the trimmed CPI. A lot of volatility is expected on this event. So we can mark it in our calendar and plan towards trading it individually. And same Wednesday, there are a couple of other high impact events on Wednesday, but I'll focus on the key one. So same Wednesday, there's going to be GDP, gross domestic product from Canada. It's an event to put our attention on. And before the gross domestic product, which is GDP, there's actually the ADP non-farm employment change. Now, this one will impact upon the dollar. So let's also put our attention on it. So these are the key events to watch out for on Wednesday. 1:15 p.m., there'll be ADP non-farm employment change from United States. Then 1:30 p.m., there'll be GDP from Canada. Now, that GDP from Canada will actually run simultaneously with advanced GDP from the United States, employment cost index from the United States, and advanced GDP price index from the United States. All these actually combined together is expected to give a level of volatility on the dollar on Wednesday. So we should expect quite some movements of the dollar on Wednesday due to all these fundamental events. And later on that same Wednesday by 3 p.m., there will be core PCE price index and pending home sales from the United States. So you see that Wednesday is the day to really watch out for a lot of volatility, especially on the dollar. The dollar and the AUD are the main, instruments to watch out for on Wednesday. On Thursday, we have a lot of tentative events from Japan, until they're released before we know how they will impact upon the market. That's the BOJ policy rate, monetary policy statement, BOJ outlook report. Definitely all has to do with the interest rate, from Japan. BOJ press conference, that's tentative. I will advise to trade the Japanese yen with any pair with the Japanese yen with a lot of caution on Thursday. And on Thursday also there'll be a lot of holidays from different countries. So like Switzerland will have its holiday on Thursday, and the Eurozone also will have its holiday on Thursday. So three pairs to be careful of on Thursday. Be careful of the Japanese yen, be careful of the CHF, and be careful of the euro. It's important. And any associated currencies linked to these pairs, we need to be very cautious, about them. However, on that same Thursday by 1:30 p.m., we expect some volatility on the dollar with the unemployment claims by 1:30 p.m. and final manufacturing PMI by 2:45 p.m. and 3 p.m. ISM manufacturing PMI and ISM manufacturing prices. So the instrument that is likely free to move that day will be the dollar. So we may look across the major pairs, excluding USDJPY or USDCHF. Any other major pair could really move on Thursday. And finally, on Friday, Friday is actually the key day for the week. It's the major day, for the week, because by Friday we'll have crossed, but by Thursday we'll have crossed to the month of May. Then that's May 1st. Then Friday will be 2nd of May. And coincidentally, that would also be the first Friday in the month of May. And usually the first Friday of every month, we do have, the biggest news in the Forex market, which is the non-farm, payroll, NFP is the biggest fundamental event. So don't, we're going to be trading live. That's what I want to say. We're going to be trading live right here at PU Prime. So don't miss it. So on Friday, there are some other events before it, like AUD retail sales by 2:30 a.m., core PC, CPI flash estimates from Eurozone. All those ones are not so important. The key event for that day is now by 1:30 p.m. That's average hourly earning, non-farm employment change, and unemployment rate. These three will be released at the same time. And like I said earlier, we are going to be trading live. And I will encourage you to be a part of that live trading session. And all you need to be a part of it is to have a funded account with PU Prime. So if you're there on the platform this morning, you're just joining us, just to take freebies. Stop taking freebies. Start getting the real value. You need to have a live trading account with us that is funded. Now, I'll drop our website address here. If you're there this morning, you don't have an account at all, then go over and visit our website, www.puprime.com, and open a live trading account. Now, if somebody has reached out to you at PU Prime before, a staff of PU Prime has called you for an event, or has reached out at one time or the other, then whatever link that person has sent to you is what you should use, to register. But if nobody has called you at any point in time, then go ahead and use that, click on that website address and go to the section where you can create an account, a live trading account preferably, so that you can have an account with us and be a part of that trading session on Friday. We're trading live and it's always been awesome. Yeah, there's been a lot of positive reviews about our live trading session. All right, so that's all from the fundamental side. I'll switch over now to the chart so that we can see what the market holds technically for this week. Okay, so I'm on the MetaTrader platform, and we just take a look at some of the instruments that we're expecting volatility on in the course of this week. This week, I'll be looking at the possibility of a bullish movement on the dollar index. And what is bringing about that outlook is the fact that last week candle closed as a rejection candle on the weekly time frame. Now, this could actually lead to a reversal in price. When price broke that level last week, we were watching, but then it closed on that rejection as a rejection candle to end the week. And that is actually a big one. And I'm just trying to get a further confirmation here. Yeah, and I got it because price equally hit a psychological level at 998. That should be 9800, 98.00, which is acting as a support for that rejection candle. You can see very, very clearly there that price closed as a rejection candle on a support level. So technically, we're going to be looking for a bullish movement on the dollar index for this week. So the dollar might actually be bullish. And if we switch down to 4-hour time frame, we can clearly see that price is forming an inverse head and shoulder pattern, which may trigger price in the bullish direction. So I hold a bullish outlook on the dollar index. And with a bullish outlook on the dollar index, the major pairs are expected to be heavily impacted by this outlook. First being the USD might be seeing a bullish movement on the USD I've said it in a couple of weeks now that price broke the major support level on the USD on the weekly time frame, and we anticipated price to go back to retest the previous support. This is what I'm saying. Price broke the previous support, and we've been anticipating price going back to retest this resistance level, and that might come up in the course of this week. As you can see that the USHF itself is forming an inverse head and shoulder. We may see a little drop further before price pushes into the bullish direction in line with the outlook we're seeing on the dollar index. So I'm bullish on the USDCHF. On the 4-hour, it can still reflect on 1 hour also if the setup is clear. Currently, we don't have really a clear setup for that, but if it evolves, then we'll see clearly when it evolves. But generally, when we're giving this session is the direction of the market. And the essence of this is to guide you. Many of us are traders. You have your own independent strategy. So what we're doing with analysis is that we're telling you the potential direction of the market so that with your strategy, you can trade and trade in accordance to that direction we are giving. So we're bullish on the USD And since we're bullish on the USD we hold a bearish outlook on the GBP USD. And this one, I've watched it critically since last week, and price seemed to close just where I anticipated it to close. Now, for the GBP USD, price closed as a rejection candle on the weekly time frame. You can clearly see that. And I tell you, this one there's a no-brainer on this one that we really anticipate a downward movement in price for the week. More so that we are bullish on the dollar index, the USDCHF, the GBP USD, where the dollar is a quote currency, we're expecting, a reversal in price. So we'll go down to the 4-hour time frame. And on the 4-hour time frame, I am seeing a clear formation of a head and shoulder pattern, and we'll be expecting a drop in price in the course of this week. Now, I will say this can be more of a swing setup, so trade it with a lot of caution. But if price is about to break out, if price eventually rather breaks out below this neckline region, then we should get ready for a free fall in price. If you're there, you're a swing trader, this is a setup you don't want to miss. Yeah, thank you, Mr. John Egon. So you don't want to miss this setup on the GBP USD. In fact, for me, this is actually my key trading setup for this week. This is it. I've been watching it since last week, and we're expecting the final breakout in the course of this week. As in, the anticipated move can generate as much as, if you're looking from this Fibonacci level here, which will act as a support. So Fibonacci 38.2 price will move to the tune of 100 pips. Yeah, Fibonacci 50 could be as much as 180 pips. Fibonacci 61.8, about 261 pips. Whichever of the levels you're able to catch, I tell you, win money. So watch out for the breakout of GBP USD in the bearish direction for this week. Now, another instrument of interest that I've put my attention on for quite some time is the US oil. The US oil. And we might be expecting the final breakout of this one also in the course of this week. I've had a bearish outlook on the US oil also since last week. It's a swing setup. So, sometimes swing setup might take some time before it evolves and finally breaks out. So we'll be anticipating the final breakout of the US oil this week. You can see we have, let's check it out. On the weekly time frame, price hit support level. Pardon me. Okay, price broke out from the support level, and this is what I'm saying. We have a breakout, a retest, and we're expecting a further continuation. So the next wave of price movement is a bearish one on the US oil on the weekly time frame. And if we flip down to the 4 hour, we have a rising wedge and the formation of a shoulder ahead, a second shoulder. So if price breaks out below this support zone, which is the neckline, we're going to see a free flow of price for this week. So we're bearish on both GBP, USD, and US oil, both of them on 4 hour. We are bullish on the USD also on 4 hour. So we're seeing more swing setup. Now, is whatever setup the market provides that will trade. Now, if you're there, you're not a swing trader, you can still trade this setup, if you have your own independent strategy. So you can just use what we're doing now as a guide, as the direction the market is expected to go. So you can use your own strategy to make entries on whatever time frame you're comfortable with, either 1 hour, 15 minutes. So either you're a day trader or a scalper. All you need is, by giving you direction, you can trade in the line of that direction. And for all this setup also, when they eventually mature into a signal, you can also watch out in the signal by drop there so that you can pick signal. That's the more reason, if you're on the platform this morning, you are not funded with us, you are not a part of the signal group, you're actually missing a lot. You are leaving a lot of money on the table. So have a funded account and be a part of our signal group to enjoy more signals from us. All right, the next instrument of interest is going to be gold. And I know many of us like gold. A lot of us gold traders. So what do we have on gold today? Just give me a few seconds. Let me flip over to gold. All right, so this is gold. Now, I remember clearly telling us last week, I think when it Thursday thereabout, that if price that gold was in a range, if it breaks out above that, resistance level, it will buy. If it breaks out below, it's a sell. And price hit that resistance level and went, couldn't break above it. So we saw some bearish movement. So that's, gave some pips on that. Now, gold is actually in a range. Now we have a clear-cut range on gold. Still the same thing as what we have last week. And why is there a range on gold? Will gold buy or sell? That's what I want to show us. Now, gold hits a psychological level up there at $3,500 per ounce, which formed the resistance, a rejection candle. Technically, we should see a further bearish movement on gold. Technically, please take note of that emphasis. However, gold at the moment is still in between the buying zone and the selling zone, because the upper movement here is still, market is still in a very strong uptrend, despite the fact that price hits a resistance and we saw some bearish movement. So gold is still within the buying and the selling zone. That's where gold still is. And if you look at it critically on this side, you still see this more like a shoulder, a head, a second shoulder, which if price breaks it may lead to a sell. But on the other hand, if price breaks out above this current level, the market will still buy. So just like last week, we still need to trade with a lot of caution. Now, within this resistance zone it is, if you're there, you're a scalper, you can still catch some moves. For example, if price breaks out, currently there's no setup at the moment. You can still draw a trend line this way, and if price breaks out above this trend line, price may target this resistance level. So that can generate a trading signal for someone in the course of today if there's a lot of volatility in the market. And another confirmation of that slight bullish movements will be a double bottom positioning, which is happening now, which might lead to the bullish breakout. So in the short term, we might really experience a slightly bullish movement on gold. But in the big picture, gold is in a range between buying and selling. So if price breaks out above the resistance here, yes, price could go back to target that major resistance at $3,500 per ounce. And that is going to be the major move if price breaks out above. And on the other hand, also, if price breaks out below the support of this zone, then we'll have a major, massive drop. So in the bearish direction of gold. So for now, we're in a range. It could go bullish. If it goes bullish, just know it's a slight bullish movement. You can take advantage of that. But the major move is still in between a buying and a selling. So finally, we have an intraday setup, which I want to show us, and that's on New Zealand JPY. New Zealand JPY. And this is a 1 hour setup. It's an intraday setup. I gave this setup on Friday, but due to market conditions, it didn't trigger. This is it, and it's even clearer now compared to last Friday. You can see that price, is trending downwards. You can see a descending trend line where price is making a series of lower high, lower high, lower high, and a lower high. Now, this is the candle for last week Friday, and it's a lower high, which equally is a rejection candle. Technically, with a rejection candle on a trend line will lead to a bearish movement. And that point also is a confluence because we have a resistance zone also. There's a resistance between those two levels. So we have a confluence there that will lead to a possible bearish movement in the course of today, because this is daily time frame. So we can flip down to 1 hour, and on our 1 hour time frame, this is what we can see. We have a trend line here, and we have a second trend line at the back, giving us a perfect looking rising wedge. Now, in reality, price has broken out below the trend line and is retesting it. So the next wave of movement should be a bearish movement on New Zealand JPY. However, I would advise we put a zone here so that we'll actually wait for the breakout. We have a resistance turn support zone there. So if price is able to break out below this zone, then we'll see a free fall in price on New Zealand JPY. So we're bearish on New Zealand JPY in the course of today. You can see the current candle on 1 hour is, forming a bearish candle. That does not indicate a sell. Take note. You want to wait till a new candle opens below the support zone with your RSI clearly below 50. That's the confirmation, clearly below 50. And the way I'm looking at this, the market also might be clearly below zero, giving further bearish confirmation on the New Zealand JPY. Now, we may look at also the profit projection of this one. And using our Fibonacci tool, all right, you can see that our entry is actually close to this Fibonacci level. I'll be looking at making our entry around 85.261 might be close to our entry level. And if our entry is around that region, then we may be looking for the first profit level could be as much as 23 pips, and that will be at Fibonacci 50, and that's not really bad for an intraday trade. Second profit level will be around Fibonacci 45. So the 22, 45, that's about 67 pips. Is not a bad one for an intraday setup. So let's just watch out, for the breakout of New Zealand JPY. All right, that will be all from our analysis this morning. I've analyzed quite a number of pairs. The dollar index, where I say we're bullish for the week, and I say we're bullish on the USD CHF on 4 hour. We're bearish on the GBP USD on 4 hour. I said gold on the big picture is in between buying and selling, but on the 1 hour, we might experience, a break in the bullish direction. And for New Zealand JPY, we're bearish on 1 hour. US oil, we're bearish on 4 hour for the week. All right, so that will be all from my end. If you have a question, you have any instrument you want me to analyze, just drop it in the comment section, and I'll take a few of them as we begin to round up. Okay, good morning, Ogunshola Clement. You're asking me to check BTC USD. So let's go there right now. All right, so this is BTC USD. Price closed last week on this resistance level. It's actually a key level. All right, we had the network glitch, but I'm back. So as I was saying, this is actually a key level. A key level is a level where we have a combination of support and resistance simultaneously. So we have a support, 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 resistance, and here also a resistance. So since that region is a resistance level, technically we may be looking for a reversal in price on the BTC USD. This is the daily time frame.
So we can't see the screen yet.
Okay, the network went off. So maybe it's the network on your end. I actually have attached. Just wait for that.
No, it has come back. We are seeing it now, sir.
All right. So I'll take that again. So I said BTC USD closed last week on a support on resistance zone. And this is the daily time frame. We have a support here, a support, and here's a resistance, and this is a resistance. So technically, we should be looking for a reversal in price. And let's go down to the 4-hour. There's nothing much on the 4-hour. This is the 1-hour. Nothing really much on the 1 hour also. Price is still just trading around that resistance level. But then I can see something here. We can draw. Since we're anticipating the possibility of a reversal in price, we may just draw a trend line here. Okay, I think it's getting clearer now. This might end up forming a shoulder, a head, possibly a second shoulder as price approaches this resistance zone, then drop. So if it works in that manner, then we might anticipate a reversal in price below this trend line. That can be what we look at trading as a bearish opportunity on BTC USD. And don't forget that you must also confirm that your RSI is clearly below 50 at the point of entry. MACD is already below 0, so that is already in the bearish zone. But that's not the only thing we look out for. So again, look for price to reverse and break out below that trend line for you before you can trigger a sell on BTC USD. Akopal has already analyzed gold. You may just have to watch the video again. Maybe you joined us late. Please always let us join early. All right, so that's my view on BTC. I think that's the only one we have here. So for those who joined us late, I mentioned earlier that on Friday, we're going to be having NFP, non-farm payroll. It's the biggest news in the forex market, and we do trade it live here at PU Prime. We trade two major news events, every month, and that's NFP and CPI. So make sure you join us on Friday live to trade the NFP. It's a live trading session where we're going to give you the signal, the entry price, the take profit, the stop loss as the data is released for employment in the United States. So make sure you join us. So what's the requirement to join us? Just a live funded account. So if you have a live account, you can also top up on your account if your fund is low, to be a part of that class on Friday. And if you are not yet in our signal group, you are actually missing a lot. This session we're doing is an analysis session where we give you direction for the market. Now, during the course of this session, sometimes we do have signals, You know, the main idea is to give direction. That's what analysis is all about. But then if you want more signals, we have a signal group where more signals is dropped in the course of the day. And the requirement is you have a live trading account with us, and not just a live account, but a funded account. And you can reach out to your account manager after that to be added to the funded signal group where you get more signal. And don't forget that we have live trading session in the course of this week. Tomorrow, Tuesday, there will be live trading session at both our Abuja office and Lagos office. The time for Abuja office is 10:30 a.m. and the time for Lagos is 11 a.m. The venue for the Abuja office is PU Prime Africa Work and Connect Building, 50 AB2 Iwe Street, Chabi, Abuja. And the venue for the Lagos office is at PU Prime Africa Lagos at Agos Executive Lounge 54B at Denny Jones Avenue, Ikeja, Lagos. All right, so this will be the end of the morning analysis session. Watch out by 12:30 p.m. for the afternoon session, you know, and make sure you join us also. Take care and have a great day ahead. Bye-bye.
Thank you very much, sir. Have a great day and a great week.
You
We
too.
appreciate it.
You're welcome.